This trading week, U.S. markets reopened only on Tuesday because Americans celebrated Independence Day for 3 days in a row from Friday till Monday. This fact, alongside the empty economic calendar, suggests that the U.S. stock market is set to trade with minor fluctuations today. Nevertheless, the situation could change on Wednesday as the U.S. Fed is due to release the minutes of the June policy meeting. The document could give market participants the key to further moves of the central bank towards tighter monetary policy. And now let's discuss ongoing developments in the equity market in detail and try to make our own forecast. The Dow Jones lagged another record high last week. However, it's now moderating its stunning rally, trading at about 34,800 points. The reason for a temporary pause is the mixed data on the US labor market. However, in terms of technical analysis, we see that the index has some space for further growth. If the market finds out positive signs in the Fed's minutes, the Dow Jones will be able to climb as high as 35,000 points at the end of the week. Before the long weekend, the S&P 500 conquered a new all-time high, having closed at record highs for 7 days in a row previously. The index has not traded at such elevated levels since 1997. However, this comes as no surprise under the current economic conditions. Indeed, the rally of the S&P 500 is mainly propelled by the high-tech giants like Apple, Microsoft, Facebook and Amazon. The market capitalization of each of them tops $1 trillion. Their shares climbed 1.3% on average last week, and now the index is taking a pause, trading at near 4,350. If market discovers some positive signs for its further growth, the S&P 500 is expected to surge to 4,370, 4,400 points later this week. The NASDAQ is also trading higher for 2 weeks straight. Now it's trading at 14,670 with prospects for a new record peak. Experts reckon the index will be able to surpass 14,720 till Friday unless negative news is released in the US. And now let's make a brief review of the companies with the nicest investment opportunities. This week we have spotted a few companies whose shares suggest handsome would-be returns. Let's start with Hilton, a global chain of hotels and resorts. At present, its shares are trading with a bullish trend. Experts reckon this trend is set to continue while countries worldwide are lifting social and economic restrictions to allow people to travel. Microsoft, the world leader in the IT industry, remains at the forefront of the stock rally. Its shares gained a few percentage points over a few recent days. They are still extending a bullish run. Analysts agree that investments in the IT industry could be a wise solution in the midterm. Apart from that, it makes sense to have an eye to shares of Facebook and Amazon. At the same time, Arrowhead Pharmaceuticals shares tumbled almost 20% in a short time. The reason behind the slump is poor results of the clinical trial of one of its experimental drugs. Tests exposed a threat to the patients' lives. This outcome immediately knocked down the shares. To sum up, what's actually going on? Even professional traders are poised to reduce a share of risky assets in their portfolios. In the last days of June, hedge funds closed a part of long positions to allocate profits taken for opening short positions. According to a survey by Goldman Sachs on the current activity of leading brokers, investors are expressing obvious risk aversion as they did in late January. The question is whether it makes sense to join the stock bears. It is too early. Trading against the ongoing upward trend would be a mistake. Nevertheless, we should not spend all of our assets on buying the shares of only one promising company. The trend reversal is around the corner. You've watched Weekly Financial Review with me, Anna Kasatkina. Thank you for watching and stay tuned.